Welcome to FXStreet. Like what we're talking about, head over to YouTube. You can be updated to what we do on a regular basis by hitting that subscribe button. Follow Kash and I individually on Twitter, Kash at Mangeko, and myself at Just Analysis One. Taking a look at Dogecoin. Dogecoin is really overdone. You have a falling wedge pattern, busted down below it late in the day yesterday, near the end of the close, near the end of the day, a little bit of a dip below this pattern. And I tell you what, like this is quite extended south. So it's right on top of the first oversold level in a bear market at 30. The optics bands are extremely oversold. This is a thing that's really kind of a pattern right now with a lot of altcoins, is the optics band sitting in extreme oversold conditions. The composite index on the daily is trading at the same level that it was back in February of 2021. On the weekly chart, when it did dip down a little bit, never mind. Actually, take that back. Think of something else. But yeah, Dogecoin price structure wise looks like it's poised for a nice relief rally to at least that 16-cent level. More than likely even higher though, because yeah, one thing on the weekly chart is there's some pretty big. Adjust the scale here a little bit. There are some fairly substantial gaps now between the bodies of the weekly candlesticks and the Tenkan-sen. So a bounce up to 20 cents, I think, is a very likely move, probably beginning this week and then extending on for the remainder of January. But I hit Polkadot's chart by accident. That's really what I see for Doge. As far as downside risks are concerned, it is still really kind of hovering above this. Well, it's not even hovering above the capitulation zone. I mean, between 15 and 16 cents actually took that image off of here that I've had there for a while. But I mean, again, there's a massive massive open space in between that 15-cent level and the 9 to 8 cent range. There's just a wide open space down here where Dogecoin could have a very fast flash crash through it. So as far as downside risks, I still see it at 8 and 9 cents. I don't see it getting down there, but it's as far lower I would see it happen if it does. But that's what I see for Doge. I'll pass it off to you, Akash.
Thank you, John. Doge doesn't seem to be doing a lot. Honestly, it is. I don't see what I can add after John just described. So Doge is below all the daily moving averages, which is the 50, 100, and the 200-day moving average. We've seen the death cross happen quite a while back. So this is the perp contract. So kind of don't see it here. But other than that, so Doge has breached two important weekly resistance levels at 0.189 and 0.169, and is currently just below the 0.15 level here. So we've almost kind of lost it, although this is a 3-day chart, so we need to see how the candlestick closes around here. If it does close below the 0.15 level, then I see it retesting the 0.123. Even if it does manage to close above the 0.15 level, there's not a lot that could happen here because of this cluster of consolidation or the resistance levels that we see here. So from the current position, the upside seems to be capped at 78.38%. As far as the downside risk is concerned, we could probably see it go down 14%, which is the December 3rd or the December 4th flash crash swing low at 0.123. This is pretty much my range for Doge. I don't see it doing anything until the next week. But if we do kind of break below the 0.12 level, although we did expect it to crash violently after 0.16, it's not done that. So hopefully we see some sort of consolidation again at 0.12, but if not, then we're headed straight to 0.078, 0.09. Yeah, that's my take on Doge.
All right. Well, thank you, Akash, and thank you everyone else for watching. Please don't forget to like, comment, and subscribe.